Hello traders, Gary Wagner here, just about 2 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, 20th day of November 2020, and this is the Daily Report for Gold and Silver. Is it time to reacquire long positions in gold? That's the focus of today's opening letter, and we'll talk about that in detail and why I believe it very well could be next week when you look at the charts. But first, to the price point. Traders, ever since Monday's sharp sell-off, and this is that long red candle here, what we can see is that over the last 3 days, we have been forming some sort of a base that is just above the lows achieved on Monday. We can also see that the ranges have been defined as a very narrow band with 1880 on the top and approximately 1860 on the bottom. Today, gold closed higher by $14.20 at 1875.80. And the question becomes, is it the right time to re-enter the market from the long side? Will we see higher prices in the upcoming weeks? And that is what we will attempt to answer when we look at our charts. We are looking at spot gold pricing, which gained 31 cents in trading today, but what is noteworthy is that it is currently trading at $1,876.90, and that is above the December futures price. Silver scored modest gains today, approximately 8 cents or 0.3%. When you compare it to the gain in gold, which is about 0.8%, we can see that in terms of gold and silver, market participants are favoring gold. The second thing is that because there's an industrial component to silver and there was pressure in U.S. equities, that also would dramatically affect pricing today. We can also see that the dollar was in essence neutral today, down 0.07% at 92.95.5, which means that the gains seen in both gold and silver were predominantly attributed to market participants bidding those precious metals higher. Ever since gold sold off harshly on Monday, draining about $100 per ounce out of the value, we have seen 3 days in which we've had this narrow and defined range. What is most noteworthy about the range is the fact that we have definitely identified a double bottom. That double bottom is roughly at $1,848. We'll round it off to $1,850. The double bottom is based on this particular set of lows and these set of lows here. The fact of the matter is, if we can see this particular area hold, meaning 1850, and when we compress the chart, we can see what a dynamic level we are currently residing at with these particular lows at 1850. And that to me is a very positive statement, tells me that gold has found support. We know that a lot of it's been dollar strength and dollar weakness that has moved it. However, we do know that the vast majority of net changes on any given day is predominated by traders either selling or buying the precious yellow metal. That being said, if we see strength coming into the beginning of the week, we know that we have an adequate place to place our stop, and that would be at around 1850. The market is currently trading at about 74, so that would be our risk factor. In terms of the upside potential, would be 1900, then 1907, then 1945, and then 1973. Those are the various levels I would look for gold to move higher if we see it hold these particular levels. Another noteworthy feature of trading this week is the candlestick pattern that we can identify. Now, granted, the vast majority of selling pressure all occurred on Monday. But if you notice, we have this red candle here, and it is completely engulfing a green candle that came before it. Again, this is a weekly chart. However, it is occurring after a defined downtrend. That creates a pattern simply called a last engulfing bearish. It means that even though we're seeing an engulfing bearish, we should look to see higher pricing next week. So we will watch how the market opens up on Sunday in Australia, and if warranted, we will send out a trade alert recommending that we re-enter the market from the long side. Realize we got out much above this, we pulled profits, and I believe there are more profit potential in the weeks to come. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.